Good morning. It's Thursday, 25th July 2024, a settlement day, a monthly settlement day for Nifty. My name is Vijay. Welcome to yet another episode of Market Commentary. So, here we discuss what's happened yesterday around the globe, including India, and what may happen today based on what happened yesterday outside India. Yesterday was a very volatile day. Yesterday was also the weekly settlement for Bank Nifty. Bank Nifty moved about 500 points either way in half an hour's time. So probably it moved about 2,500 points during the day. It closed at around 460 points, while the Nifty closed at about 65 points. So if you look at the broader market, that was a completely different picture. While the Nifty and Bank Nifty struggled through the day with very few bounces, which were again sold, the broader market, the micro cap, the small cap, the mid cap, all of them did very well. In fact, they closed some 2% higher. And many stocks went up 4%, 6%, 10%, 20%. Now, I had mentioned that this kind of pattern, which we see after budget, where there is a surprise tax increase, has happened once before in 2018. And I also showed you that pattern between demonetization, which happened in 2016, to January of 2018. The market went up by 41%. Right now, between March of 2023 and last week, the market went up by 47% on the Nifty. So I was wondering whether we will have a repeat. That is, soon after the budget announcement in 2018, on the budget day, nothing happened, though the capital gains, long-term capital gains were reintroduced. Long-term capital gains were not there for many years before 2018, but Jaitley's budget reintroduced. At one point of time, there was a shock, but the market quickly rallied. But the next day, the fall started in Nifty as well as in the broader market. In fact, the broader market that time fell 4 to 6% and started a bear run, which went on for the next 2 years and finally bottomed out in March of 2020 at the COVID bottom. So I was wondering whether we will have a repeat. Now, nothing in market repeats exactly. So yesterday, I was pleasantly surprised that, the bulls took up the baton and ran with it, especially the broader market guys. So I was wondering, is this time different, which is a very dangerous phrase to use, but nevertheless, I have to go with what the prices are doing. So now, today, what we are seeing is a lot of nervousness, a Humpty Dumpty kind of situation, because while the Nifty and the Bank Nifty are trading at high valuations, but not at bubble valuations. They are trading at 23 PE. For instance, Nifty is trading at 23 PE, where that is the trailing PE. So forward PE will be about 21 or something like that. Usually, Nifty has topped out at around 28 PE. So there is still some distance, theoretically, if you go back by past history, that Nifty can still move further, though it is slightly in an overbought zone. But if you look at the broader market, many of the stocks are trading at 100 PE, and many of the stocks don't even have growth rates. So one would wonder, why is the broader market going up so much and the Nifty and Bank Nifty are not doing that? That's precisely because the market is flowing into the broader market through either NFOs or through mutual funds or through direct investing. So this is a tale of two markets. This is one situation. One has to be very careful. Whatever one may have experienced, whatever one's predilections may be, whatever one's biases may be, we need to go with the price. So if you see yesterday, the European markets crashed. They recovered somewhat at the end. The European markets, DAX and DAX recovered somewhat, but still in the red. The US markets went into a free fall. Dow Jones, I think, fell about 500 points. S&P fell about 128 points, and Nasdaq fell about 650 points. This was one of the worst falls. I think this was a fall which we are not seeing in entire 2023 and early until now in 2024. So we would say 18-month, let's say, track record of the markets, US markets. We have not seen such a big fall. Now, subsequently, in the US futures, the markets have recovered. Nasdaq is up 95 points, Dow Jones up 95 points. So today we may see a recovery because it is highly oversold on a short-term basis. Now, so therefore, today what has happened in the Asian markets? Asian markets, in Japan is very weak. It was down by 1100 points at one time. Now it is trading around 980 points. Hang Seng continues its weakness. Hang Seng currently is trading at around 260 points. And other markets are also not doing anything. Now, other asset classes also are not doing well, DXY or oil. Most important is precious metals have collapsed. Now, because of the tax implications in India, the gold and silver prices came down, but something has turned on because India is a very big player in the global market. So many times India leads the prices in gold and silver. So you are seeing a meltdown in gold and silver specifically in global markets. Now, I still believe silver is in a bull market and gold is in a bull market. So I believe that this fall will be short-lived. And 2025 will be a year of precious metals. Whether it is a year of equity, I don't know. But precious metals, I'm pretty sure. Now, so how do we open today? GIFT Nifty says we are opening 250 points down. Now, 250 points down for no reason, especially when the markets have rallied, from their temporary bottoms yesterday, they moved up, is somewhat surprising. But then sentiment is prevailing. There is sentiment of fear. People feel it's a Humpty Dumpty market, and anytime the market will collapse. And this collapse theory has been going on for quite some time. I will buy this collapse theory only if the Nifty trades below 24,200 for a couple of days. So yesterday also, or rather day before yesterday, it fell below 24,200 and bounced back. Yesterday, it has not done that. It has not gone to 24,200. So I'm keeping 24,200 as some kind of a Lakshman Rekha because 24,200 was very difficult to cross in the last few months. So what was an important resistance then will become an important support now. So I am looking forward for calling it a bear market or a bearish trend only if it falls below 24,200 for a couple of days. And then the bull market will be over in my estimation if it goes below 23,650. And a severe bear market can start if it goes below the July 4th low when it went up to about 21,180. So clearly, none of them have come. The 24,200 also has not been breached on a closing basis. So I am just going to watch this market and buy into stocks where the PE ratios are 10, 12, 15, nothing more than 20 PE and PEG not exceeding 2, which means they should have grown. If the PE is 10, they should have grown at least 5. If PE 30, they should have grown about 15% per annum. So I am looking at those. So today I will be cautious because volatility can be there. And a lot of positions are there. You have seen FIIs selling 2 days in a row. DIs have bought, but not as much as FII is selling. So all in all, today will be a volatile day. It should be more of a watchful day and take less positions is what I think I should do. But I'm not a SEBI registered advisor. I'm just another analyst who has had some experience of about 35 years. So whatever you do today, hope it is successful. Thank you for joining me. Good day.